Hello everybody, good morning and welcome back to howtotrade.com and welcome back to another live stream here in our trading room and across our social media channels as well. It's good to see you all and thank you very much for your time tuning in on this Thursday morning. There's been quite a bit of market movement, to be fair. I haven't got much of not because I'm being lazy, I haven't got much of a structure for the stream because what I wanted to do was go through the normal things that I would do anyway, the economic calendar, some market opportunities, what's screaming out to us at the moment, some of the biggest movers, all that stuff. But I also wanted to title the stream a live trading Q&A because what I wanted to do was open the floor up to anyone who wants to ask a question. And so I strongly recommend to come on and ask any questions that you may have regarding trading or markets. It's your time to really ask those questions. So if there is something on your mind, there's something you're not sure about, there's something you want clarity on, now's the time to ask those questions. Hopefully I get a few people asking questions today. If not, it will be a short stream. So it is going to be dependent on you guys as well. So obviously I'll give you some time to think about that and ask the questions that you may have. And whilst you're doing that, I will go through some of the market movers for today. Okay. Good to see you all anyway. It's very good to see you. Martin174, hello to you. This is in our trading room. We've got Devon JW, hello to you as well. Jeffrey, good morning to you. Good morning to you. Dibble, hello to you. Danist, David 40, hello to you as well. And Ivy, very good morning to you all. Those people normally every day turning up to my streams, I really appreciate that. So thank you very much. Good morning to you, Clive, over on the YouTube channel, and also on our YouTube channel we have Rainer Fitness, who has asked a question already. Is how to use the key levels when you provide on your site. You give 2 levels, which is best. I'll talk a little bit about the trade ideas as well for you, no problem. In fact, we can do that now, can't we? Whilst people are thinking about some other questions. I'm just going to, as soon as a question comes through, I'll answer it straight away. So when it comes to the trade ideas that we have in the room, hello to you, Wizard Alvin, as well. So for those of you who maybe have not seen the trading room, on this left-hand side under market analysis, myself and Shane, who's our coach over in the US, we post at least one trade idea each per day. And the idea of those trade ideas is they're not signals, okay? So I think people sometimes get confused because they think they're getting signals. And I can tell you now, the reason we don't provide signals is because signals don't work. It's just trading is so personal, and you will see things differently to the way I see things. And if you just pump out signals all the time, there'll be some that you miss. There'll be some that you do something slightly different, whether you cash it out early. It's just there's so many components when it comes to trading that simply by following someone's signals, I have never seen an example of where that actually works. So what we try and do here is provide more like trade analysis or trade ideas. So when it comes to the key levels, hello to you, BT, as well. Good morning to you. Hope you're doing well. When it comes to the key levels so if I go on my one, for example, when you look at this NASDAQ buy analysis that I put in yesterday, obviously myself and Shane have different ways of trading, so it is important that you actually read what the trade idea is about, because that makes the key levels make more sense, essentially. Now, when it comes to the key levels, in this example, the way that I tend to do it is, unless it's a trade which is from market, which means from the price that it is currently, normally my key level number 1, this one here, is where I'm looking for the market to go to first, either down to a support or up to a resistance. And then the next key level is what my sort of target would be from that area, okay? If it's a situation where, the trade is already, or the price is already at an area of support or at an area of resistance, then you'll notice that the 2 key levels will almost be like 2 sort of take profit areas in a way, without them being take profit areas. Are just areas in which I would look to target to if I was going to buy from that area or if I was going to sell from that area. So this in this example, if you scroll down the bottom here, I've said here, the bullish trend in the NASDAQ remains very strong, with the recent bull run seeing the price rise from 19,886 to 21,225. So that's the Fibonacci retracement, okay? That's the Fibonacci that I've drawn. This meant the Nasdaq printed record highs. A Fibonacci has been drawn from the swing low to the swing high on the chart above, as you can see. Considering the strength of this market, traders may want to utilize the 38.2% level of 2742. And if you click on the actual trade idea itself, it's not going to let me. Oh, it does. That 2742 or whatever 27700 is this 38.2%. So that's my first key level. You see where I've drawn the arrow down. And then what I'm looking for is the market to trade higher, and I've put my second key level in there of 21,500 because that's where I think we could be seeing the market go, i.e. up to a new high. That's the way that I use key levels. You may want to ask Shane how he does it, but I think it's something similar. Shane probably is more, let's just have a look at Shane's resistance in view for US oil. So he's got his two key levels of 69.14. Yeah, he's done the same thing. And then 68.59. So if you read what Shane says, he's got the daily Fibonacci as well, and he's basically marked those key levels as there being levels, maybe to the levels where there will be resistance. So in his example, he's actually put two resistance levels: 68.59 and 69.14. So 68.59. I can't actually draw this because it's a picture. 69 will be the 38.2%. You can see that there. And then just below it as well, probably where this wick is. So, yeah, what's important is we try to keep the annotations on the graph as simple as possible, because what you can do is you can copy these annotations over on a over on a TradingView account. You can basically copy this. All he's got is a Fibonacci on a daily time frame from there to there, so you can actually have a look into that analysis yourself and follow it live. Unfortunately, we can't do that. That's what we use the streams for. Okay. Okay, good stuff. Right, just check if there's any other questions coming through. Saeed, I am doing very well. Thank you very much, and I hope you are doing well as well. Thank you very much for the message, and hello to Curtin. It's good to see you. Nanasari, sorry if I pronounced that wrong. Good morning to you, new student here. Very warm welcome to our new student, Nanasari. It's very good to see you, and thank you very much for the message. And I do apologise if that was a really bad pronunciation of your name. I hope it was somewhere around the right way. So it's good to see you anyway, and thank you very much for the message. Any other questions anyone has? Have a think before whilst you have a think of that. Just wanted to point you in the direction of the economic calendar for today. We have gross domestic product figures that have just been released from Europe. Let's have a look. So gross domestic product came in line with expectations, 0.9% year on year and 0.4% quarter on quarter. So nothing really that's too much of a surprise there, to be honest. Let me just quickly track the reaction of the euro on that. The euro's taken a bit of a hit today. When that news come out at 10 o'clock, you can see nothing really to be that concerned about, if I'm being honest. Interesting. Yeah, it looks like euro pound's going to move a little bit lower as well. I mean, I don't know if you guys have been looking at obviously what's been happening with the US dollar. Obviously, it's been on a fantastic run. I know we've spoken about the trend rider quite a bit, but I mean, it's just some fantastic example of if you can stay patient in these markets. It's like, say for example, you missed this initial trade from this trend rider, this initial sell. That was on the 4th of October. You'd have to have waited a month until the next clear opportunity, unless you obviously kept getting in at retests. But I always say try and get in at the first test. If you waited a month, it would have paid dividends, which is crazy. It's not the only one as well. I was looking through it this morning. If you look at the pound, not quite got that test yet. Look at this USD Swiss franc trade. Look at that. That is absolutely flying. Again, let's just go through USD versus the Swiss franc. Let's say, for example, you were looking for, you missed this trade on the 3rd of October. You missed this buy opportunity on USD Swiss franc. And you're kicking yourself. You're like, oh, look how much I've missed. Look how much I've missed. And then what happens is the market, crosses back over, and then we get a new crossover. We got our first test, which is a 30 pip gap, right? And that's up to the 7th of November, so about 4 weeks of trading, of sitting on your hands. And this is the difficult bit about this strategy, which I'm learning, and I've learned that if you can just remain patient and wait for that next test, it can be really, really fruitful. So then say, for example, you was in this trade, 4 to 1, let's say you risked 2%, you made 8% in a month by waiting. One trade. It would have taken you all of probably 20 minutes to prepare for this trade as well. So trading doesn't have to be complicated. That's the thing I want to drill home. If you look at dollar yen, look at that crossover. Actually would have probably taken a loss there. But then we've got another entry up here, which you can see much, much higher. Aussie dollar, US dollar, I marked this on the stream yesterday when the CPI came out, and it was quite strong, fairly strong. But the market the dollar initially traded lower, and then the sellers stepped in, or the dollar bull stepped back in. You can see that really clearly as well. Gold, again, look how beautiful that is. Just respecting that EMA 12 all the way down. There was your first entry. Re-entry. Boom. You've made half a year's profit there in one trade if you manage to catch on. And the same thing on silver. But if you miss the trade, I've just shown you that if you just wait and just let everything play out, even if it takes 2 weeks, 3 weeks, 4 weeks, 5 weeks, at some point there's going to be a new crossover and a new test. Okay? This is not it. Just because the price has moved so far, it doesn't mean that's it. It's also important not to get FOMO as well. Nana says you find it difficult to understand the trend rider by Mario Singh. That's fine. What I'd recommend that you do is, if you go to the education section, I'm not sure if you've seen this. If you click on the education tool here, because I know you're new here, on education, on strategies, if you go to Trend Rider, and when this pops up, click Move Me to a New Path, and you'll see that we've got a whole video on it. And not only have we got a video on it, we've got learning resources. So there's PDFs here that you can download, which has an overview of the strategy, a trading guide, and trade examples as well. Okay? I'd recommend you have a look through all of that. And then what else you can do is you can go to the stream section, past streams, and if you go view more, you'll see that I've got past streams here, live trading the Trend Rider. Live trading the Trend Rider. Live trading the Trend Rider. You see that there's lots of, I've done streams on it pretty much every single week as well. And I'd recommend you dive into some of those streams and then see how you get on with that. Okie dokie, right. Ivy, hello. Could I have your views on gold, silver and oil? Do you still have a short bias, and how low could we go? Yeah, let's have a look at that then. Let's just have a look at gold. Start off with gold, because something really, really important happened in gold. When was it? At the beginning of the week. So remember at the beginning of the week, I don't know if you was on the stream, I marked this area here as a order block or demand zone, basically a key area of support. The reason that was such a key area of support is because it was basically the last leg, the last bullish leg we had. That was our market structure. There was our market structure low, there was our market structure high. So whilst we were doing this, we were still bullish. But then what happened, excuse me, what happened is the market's now broken structure. Let me get rid of the... And so, for me personally, when you look at market structure, for me now, what we have is a new leg. Because what's happened here, we've broken below this low. We've even broken below this low. Because if you mark the market structures on the way up, probably looks something like this. And we've now broken this low and this low, or nearly broken this low today. And so I would actually turn around and say, and it sounds weird to say this because it's been difficult, or it's been such a bullish market. I think we're bearish on gold now. Now we've broken those structure lows, we're bearish on gold. Now that doesn't mean we just sell gold, does it? Because if you know market structure, you'll know at some point this market's going to bottom out and we're going to get a bounce. And what's then important is to then try and get in the market as close to its next lower high as possible, which might be up here. I mean, it's difficult to predict where it's going to be because the market hasn't stopped falling yet. But it might be at the 30. It might be around 2630. Might be around 2650. You know, once this market does start to bottom out and then retrace higher, we can maybe then start to analyze where we can get the next selling opportunity. The next selling opportunity from. What people get, what will be happening right now is everyone will be selling gold at the end of its leg of structure, basically. And then what will happen is gold will bounce and then potentially create a new, lower high, shake everyone out of the market, and then we'll get the next leg lower. And then people will do the same thing. Because what retail traders typically do is sell low and buy high. And that's why being patient is really, really important. So yeah, the structure's definitely turned bullish now on gold, in my opinion. And I think the structure's just turned bearish on gold, and the structure's just turned bearish on silver as well. Why? Because our previous market structure low, which is here, has now pretty much, I guess, if the market closes below here today, then again, that's our bearish bias confirmed, basically. Market structure is key. Market structure is key. And with oil, yeah, I mean, for me with oil, I'm actually short oil at the moment. It's worked out pretty well so far. It was a trend rider short, and I also had the added confluence of this daily head and shoulders. I still remain bearish on oil. We are sort of trading around. There is some support coming in here, and you can see how the market came and basically wicked below this neckline, but then sort of snapped back higher. You can see that. So I still remain bearish on oil. That will change if we get a move above 70. So mark that as a key level, because I think if we get a trade, and Shane will probably agree with me here, if the market does this, then it might be a case of trying to catch on to the wave higher. If the sellers keep stepping in around these areas, 69, and then we get a break below this neckline, then we'll continue bearish lower as well. So the fact that I'm already in a sell sort of helps, because it sort of decides my mind for me. But as you can see, my stop loss for this sell is just above that 70 level, because I think that if we come above there, then I think we could be turning bullish on oil. Saeed, hello. Could you please give prop firm trading? Is it a good idea? Do you mean advise you on whether prop firm trading is a good idea, or actually provide you with prop firm trading? What would you mean by that? Targeting on working on this, building up a bigger capital for next level of personal trading. If you want my opinion on prop firm trading, I'd say it's pretty good. I've got no issue with prop firm trading. What's better, building a personal account or prop firm trading? If that's the question, my answer to that is it depends on how much capital you've got. I would always say that if you have your own capital, then it's important. If you have your own capital, like you have a substantial amount of capital, I would say like sort of at least 10,000 of your currency, dollars or whatever, $10,000 say, then I think the personal trading route is probably your best route, because there are obviously rules with prop firms which they're not designed for you to fail, but they make it difficult to pass because they want to make sure that you can trade. Now, with prop firm trading, if you don't have much access to funds, as in you only got, say, £500 extra in your savings account to actually invest and which you can afford to lose, then prop firm trading becomes a viable option. What I always say to people to do in that situation is do your prop firm challenge, pass it. If, like I'm saying, this is the ideal situation, pass your prop firm, start getting your monthly or however long it takes, start getting your income from the prop firm, and put half of that income into a personal account and half of it back into your bank account, into your savings, so you can actually reward yourself. And what you can do is build your own personal account from the prop firm, with the idea to build up enough capital that you've probably got the same amount of capital in your personal now as the prop firm, so you then don't need the prop firm anymore, if you know what I mean. That's what I think the best thing to do is. That's the sort of thing that I do when I've had payouts and props. I enjoy half of it, and then the other half of it I invest. With Bitcoin, yeah, I mean, for me, Bitcoin's on a one-way ticket up to 100,000, isn't it? I was speaking to this about Shane. It's a similar sort of thing, right? If you're already invested in Bitcoin, great. If you're thinking about investing in it, then just be careful. Or if you're thinking about trading it, then be careful. Similar sort of thing. Always study market structure. The market has now created quite clearly and quite aggressively a new leg higher, right? At some point, Bitcoin is going to consolidate and it's going to dip or retrace, and then it's about trying to get in. You just don't want to be buying it when it's already. You don't want to buy things at all time unless you want to hold it for ages. What's my view on it? I think we could reach 100,000 by the end of the year. I do, but I think there'll be a lot of profit taken around 100,000. I think we could see a move back down towards 90. So the risk reward right now to buy it just isn't good enough, and therefore we need to wait again for that higher high to be created. Right? It might be here. That might be the high at 93. Wait for a dip or a consolidation period, and then those consolidation periods can last. Well, they probably last twice as long as the leg higher. So you might be waiting again a few weeks. But this is how you trade. And then you get in. Not buy here, and then when you think, oh yeah, great, and then suddenly you're in drawdown for a month, and then you probably take your loss, or a deeper retracement might happen. It's all because you didn't wait for the structure to form. So yes, I believe that Bitcoin is going to go to 100,000 by the end of the year, if you want my prediction. But I think there'll be a lot of profit taken around that area. Clive says it's taken me nearly 2 years to completely understand market structure. It's amazing. We most definitely are creatures of habit. 100%, Clive. I always say to everyone, once you understand market structure, it helps you to avoid making decisions based off of FOMO, like when the market's already at lows and you want to sell it and you miss the trade and you're like, if you think, right, market structure, it's actually a good thing that big move's happened, because it's given you your bias, and then all you got to do is wait for the next sort of part of the market structure, which is either a consolidation period or a retracement period. Okay, so when it comes to what I'm looking at for today, I'm just probably going to be tracking my oil trade, to be fair. So I'm not really going to be actively placing any more trades, but I'll have a look at the I'll post something in the room as a trade idea to see if there's anything that we can sort of catch on to. But I'm a bit mindful of how far the dollar's already come, and I don't want to be chucking out ideas that are, you know, not anything that I would necessarily take. So let me have a quick scout or let me do what I normally do and scout and analyze the markets, and then keep an eye on the market analysis section for any more trade ideas. Thank you very much for those who asked questions today. Very, very much appreciate it. It seemed to be quite a successful stream. So if you want me to do more trading Q&As, then let me know and I will schedule some more in. Until then, it is coming towards the end of the week. Weekend is coming up. Friday tomorrow. Trade well, trade safe today. We've got US PPI. So I'll be having one eye on that as well. Thank you very much, guys. Take care, trade well, and I'll see you all very shortly. Thank you.